So again, my colleague Charlene D'Souza, was speaking to people in trade and retail trade, and everyone kept saying liquidity nahi hai, and I was very sort of irritated by what do they mean by liquidity nahi hai? What are we referring to here? I mean, is this the NBFC problem or what? What is the issue?
I'm very puzzled by this phenomenon of there being no liquidity, because every measure of, well, let's take it one by one. First, yes, currency in circulation had gone down as a percent of GDP. That had hurt cash transactions, but that's been rising every quarter as a share of GDP. It's rising until the existing quarter as well. It's back up to 11.4% of GDP. It used to be 11.8% before demonetization. So the rate of growth of currency in circulation has exceeded nominal GDP growth for the last 2 years comfortably. Yes, that rate of growth has slowed down, but you'd expect that after the remonetization got over, and after the fact that when the GST was introduced, you had some transactions being conducted in cash to evade the GST. Once those effects have normalized, you'd expect this to slow, but still currency in circulation as a percent of GDP is back to 11.4. Liquidity, core liquidity was tight a little bit a few months ago. The RBI has made a concerted effort to bring that down. Core liquidity is now in surplus, and we expect headline may also head to surplus in the coming months as the government starts spending post-election. I think the issue is, some people have alluded to M3 upon GDP going down in the last few years. 85% has gone to 80%. This should not be a surprise. M3 is going down because credit growth has been weak in the last few years, which is an inevitable consequence of deleveraging. Whenever any emerging market undergoes a deleveraging process of its banking system, M3 to GDP is bound to go down. The new information is that over the last 6 or 8 months, credit growth is now at 13-14%. And as I mentioned, the RBI believes that the total flow of funds, banks and NBFCs, has actually accelerated over last year. So I would expect in the coming quarters M3 to GDP to also start rising again. Again, the elephant in the room here is the NBFC sector. Are there more systemic issues with it? Will an AQR be done? If an AQR results in question marks about underlying asset quality, will there be some kind of deleveraging in the NBFC sector as well? I would argue we have to take that risk, and as we learn from the banking system, the more you push that out, the more you become subject to what's happening currently, which is, Joseph Stiglitz won a Nobel Prize on this. It's asymmetric information. Because you cannot separate the good apples from the bad apples, you stop lending to everybody. So I think that is one risk in terms of M3, but otherwise I'm hard pressed to figure out what this argument about there is no liquidity is in the market.